The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 28th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So it is Fantastic Friday. And let's go look at one of our tools. This is the tool this is the tool that absolutely, positively, each of us need. In fact, we need to be able to teach it to everyone that is in our lives. This tool always comes from a place of strength, especially, and I mean especially, folks, when fear is running through your veins, your heart, and your soul. Good decisions only come from strength. You know, in the news this week, there's been the story, I believe the last name, the CEO that was held captive by his employees in China. I think his last name was Starnes. Out there, if I mispronounced it, I apologize. I have a story similar to his, and maybe I'll go into it later today. But what I want to do is, as you know, fear is just simply talk about the importance of really coming from a place of strength. Because at any point in time, fear can easily overtake us. And fear, it's just simply an emotion. And an emotion is nothing more than a state of mind. Just like strength. Strength is a state of mind. And now the best way, in fact, the only ways I know of that you can change that emotion, the quickest way to be able to change your state of mind, it comes down to really three things. Your state of mind is a result of your physiology, your focus, and your words. Those three things. You should write that down on a piece of paper. Your physiology, your focus, and your words. And it's really a formula of about 60, 30, 10. Make up 100%, meaning your physiology is the most important thing when you all of a sudden have all that fear run through you. Think about it like this. You know, which way does a fearful person look? Do they look up or are they looking down? Just even how about their facial expression? Are they smiling or are they sad? That's right. A fearful person is looking down. A strong person is looking up. So the very first thing that you need to do when you have fear that runs through you is just stop. Stop, and you just need to look up and outward. And then think about maybe somebody walking down the 18th fairway, even if you don't play golf. If they have strength, if they have belief in themselves, which way, how are they walking? Walk the walk, right? And, the shoulders are back, and so whether you're in your chair and you've got fear that's overcoming you, just simply sit up, just change your physiology. It's the first way to just simply shake out that fear. Next becomes focus. Are you going to focus on the worst or are you going to focus on the best out there? Are you going to focus on what possibly could be? I know you might take a look at the situation and say things look awfully dim. But if you knew that things were going to work out, if you knew that they were going to work out, which they will, how would you then respond? And what would your response be? So fear, it's an emotion. You've got to get rid of it. When you're making a decision, especially, no one likes to live in fear. Change your physiology first. Change your focus. Focus on the possibility. Focus on what could take place out here, the positive out there. And then The other 10% is just simply use the right words. Just use words of positive. You know, it's not a matter of if I think positive thoughts, they'll come into your life. But yes, what you do think, you do attract into your life. But you want to make sure that whatever decision you've got to make in life, you want to come from a place of strength. So maybe during the show here today, I'll tell you about my little story over in China. And it was in China out there. And so I went through, and it was a time where it was probably the time that I was most fearful in my entire life. In any event, let's go look at the fear in the marketplace out here. Right now, we've got the Dow futures are off about 37 points, trading out at 14,899. S&P futures down 3 at 1603. NASDAQ futures off 7.5 points. They're trading at 28.92 out here right now. Russell 2000 off a point at 975. King dollar back about 6 ticks. The euro up 31 ticks right now. Gold is off $18. Gold trading out at 1193, 1170, 1100, 1150. Here we come. Maybe we're going to, well, I would imagine we're going to see that today. You get silver's trading up about 2 pennies. Light sweet crude up 12 cents at 97.18. Let's take a quick peek around the world, see what we have going on over in Europe right now. You've got the DAX. That's interesting. The DAX off 56 points right now, off 0.7%. The FTSE down 22 over in Asia last night. Nothing but a party out there. You had the Nikkei up 463 points, almost, 3.5%. The Hang Seng was up almost 2%, up 363 points. And the Shanghai up 1.5 at up 30 points at 2071. Our call number is 877-927-6648. Give us a call. We can take a look at your stock, your commodity, anything it is that you want. We're going to start off by taking a look at the S&P futures. We'll take a look at the ES Mini. I've got the 120-minute chart up on my screen. So if you are listening to us on your mobile device at TFNN.mobi or a radio station, thank you so much for doing that. Remember, you can always get the live stream of this show sent to your smart device. Just simply go to the homepage of TFNN.com. Over on the right-hand side, you'll see a little button with 3 smartphones. Click on that little button. This show will stream live, and you can always get the archive of this show on Channel 9. Of course, if you'd like to see these charts in HD, that means you just need to join the Tiger's Den. That's a great place to join, because if you are trying to take yourself to another level, the only way to do it, the easiest way to do that, is to find a peer group. You know, if you play tennis, if you play with players that are less than you, worse than you, is your game going to get better? No, it's not. You want to always play with somebody that's playing a game at a higher level than you, and that is really the Tiger's Den. So check that out. Again, all the details on the homepage of TFNN.com. So as we take a look here at the 120-minute chart, we can see that the futures are trading off here, and in fact, we're seeing a breakout of a consolidation area, small consolidation area. This was after the run-up. I'm going to go ahead and I'm going to widen this out here on the chart. I'll widen out in just so we can look at it like this. If we take a look at what occurred so far, what occurred so far is we had a run-up here in from the high. We're going to take a look at this leg down, the C to D leg. That's what we're taking a look at the moment. The C to D leg of an A to B equals C to D down. That A point starting, as you know, back on May 22nd. Now, we're going to take a look at the C to D leg, and that took place at about 5:30 in the morning on June 19th. The high out there right around the 1648.25 mark. And then the low that was put in, this came in on Monday, June the 24th, and the low out there on the 120-minute session was at 1553.25. If we go from the top to the bottom, what we'll see is price stalled and stopped at the 0.618 retracement level. That is a normal thing. That is a normal thing for it to do. That was right around 1613. What we actually saw here coming into 3:30 this morning was a move up to 1614.50. We actually saw that move here coming into 1614.25 at 11:30 yesterday morning. And then what was taking place, if we go down, we take a look at the EKG, the 30-minute chart, what we'll see is extreme overbought condition. We know that a market has to work itself off and it's going to work itself off either by traveling sideways or by moving back, by coming back. And what the ES Mini did here is it just simply moved sideways up until we came into this session right now that we're in. It moved sideways up until 7:30 this morning. This session is not over here, won't be over until another 15 minutes. So this could be a breakout of this consolidation. And if it is, where will price go to? Well, if we just simply take this yellow box I've got on my screen, we're taking a look at about a 9-point consolidation. So all you have to really do is take 9 points off of the low. The low was 1605 out there, and 1605 minus 9, that's going to give you what? It's going to give you 1596 out there. How's that for math? early in the morning. I'm pretty sure it's 1596. And in fact, if we go ahead, we can take this little box, we can just simply move it down. That's in essence what, now that's the minimum price projection. When you break a consolidation area, your moves are going to be equal to or greater than, in essence, the consolidation zone. Now on the bottom of my screen here, you can see two relative strength indexes out here. I teach you in my special report, the trend is your friend until it changes. I teach you how to use that bottom one. And if you have not signed up for that special report, please do yourself a favor and do that. Go to the homepage of TFNN.com. Over on the left-hand side, where what we call a carousel, you'll see an up arrow and a down arrow. Click on that until you see that special report, The Trend is Your Friend. Download it. And as well, you've got an opportunity to test drive my newsletter service, Mastering Probability, complete with all kinds of trades, education, what it is that we're looking at. If you want to understand what the market is doing at 8 o'clock in the morning, if you think that that would help you, and what trades to be taking a look at, then you certainly will. And you can access that newsletter service now 2 weeks absolutely free, no charge to your credit cards, no nothing out there. So, and I have not done that in the past, so that is the 4th of July, as we're coming into the 4th of July. That's a summer gift to you, and it will not be available long out there. So go ahead and test drive that. As we take a look at this, you know, we won't know about whether this consolidation zone here is broken because the 120-minute chart is not over until 9:30. So we've got 13 minutes. So let's go peek into the 30-minute chart out here. Now, let's also, we were talking about the 16 or the 1595 level. What I want to do before I go take a look at the 30-minute chart, we're going to come from the swing point low at 11:30 in the morning on Monday, on June 24th, all the way up to the high that was put in here. And what you'll see is right around the 1591, what you're going to see is you're going to see a 0.382 retracement of the move up that we've seen in the marketplace. That's nothing more than a normal retracement, a dead cat bounce. And in fact, what would happen out here, this is the 120-minute chart. Actually, what would happen out here, I can't tell you what would happen out here. What I was noticing was the mere fact that price has moved back into the downtrend channel out here. So when you move down back into the downtrend channel, you know, that could set up a run all the way down to the bottom. The Bears absolutely fumbled the ball yesterday, and that makes today's trading session very key. If we get a close, I gave you the number yesterday. If we get yesterday I said the close was on the Dow, just simply because since it's a top-line number and so easy to pay attention to, as opposed to net advancing and issues out there in the New York Stock Exchange. I said, look, if the Dow closes above 15,009, the bulls have taken control of the ball. And that's where we are today. We won't know until today's session is over. However, if in fact the Dow closes back below 15,000, 14,998, we're going to make it easy. If it closes back below 15,000, then it was just simply, as I put in my newsletter this morning, it was 3 downs and out. And the Bulls will have punted the ball, and they will have given the ball back to the Bears out here. So today's trading session, yeah, for a Friday in the summer, you know, it's an important trading session in order to understand who really has possession of this marketplace. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 55, S&P futures off 5 1/4. And I said we were going to go dive down into the 30-minute chart, so that's what we have on our screen here right now. And on the 30-minute chart here shows really a beautiful little Gartley pattern. Take a look at the symmetry of those two wings out there. You know, it looks like a butterfly, but really it's not it's not what we call a butterfly, just simply because a butterfly, we're looking at an expansion. What we can see here is we made a 0.618 retracement. That was, again, coming off of the, now this is really the C to D leg that we're taking a look at on the 30-minute chart. That's coming off the highs here at about 6 in the morning or so on June 19th, right around that 1649 level, all the way down to the lows that were put in on Monday down at about the 1553-ish area. And if you go from that high to the low, you're going to see you've got a 0.618 retracement. We saw that on the 120-minute chart. What you also see here on the 30-minute chart is you see an expansion of your C to D swing point. Remember, there was a hammer candle that formed. We pointed this out here, and that created an area of good support. That was down at about 1:30 in the morning on June 25th out there. So we clearly knew where the bulls were hanging out. The bulls always, they cannot disguise themselves. That's what is so cool about learning and understanding candlestick charting, because it helps you to really read the message of the markets. And this is nothing more than a football game or a war, a battle going on, and it's you are the coach, and you have to understand what the troops are really doing out on the field here. And that's why candlestick charting is so key out here. So it had that hammer candle that formed the 0.786 retracement of the first move up as it pulled back. And now what we can see here is the expansion of that B to C leg. The B leg out here inside the 30-minute chart, that came in at 3 in the afternoon on June 24th, out at a price level of 15.80 all the way down to that hammer candle. If you went ahead and you took the difference of those two, you multiplied it now times 2.618. You see there's really three expansion, well, there's four expansion numbers that you really pay attention to. Those being 1.272, 1.618, 2.618, and then nothing like good old apple pie, 3.14, and so on out there. And that's what you really want to be paying attention to. In this case here, we made a 0.618 retracement and a 2.618 expansion. And that, in essence, if you were wondering, why did price stop at that 16.15 level? Well, that was one of your reasons, just simply because of all that great Fibonacci numbers coming together at the same time. And what we were also seeing there was we were seeing a market that had moved into where? Into that overbought territory. Now, as the market is pulling back here, what is it that we're running into? You can see it at the bottom of the screen. We're running into a market that quickly on the EKG is moving into the oversold condition out here. So it's moving into an oversold condition. And again, if we just simply go take a look at our A to D leg, meaning if we go from the bottom on the 24th of June all the way up to the high that came in yesterday, the 0.382 level, which we're not even down to just yet, is 1591. And the market here is getting towards that oversold condition out here. Something to think about. This is the place where you start to see a market maybe turn up out here. So today is a really key session, as I said, because the Bears absolutely fumbled the ball yesterday, and it's so important out here. Like, let me share this chart with you here. It's one that, there's so many that are featured inside the newsletter service. And I have an expanded version and a synopsis, a smaller version out here. We're going to take a look at the McClellan Summation Index as well as the oscillator. We're going to take a look at the New York Stock Exchange because that is such a key breadth of the market out here. And if you take a look at the two areas on the bottom of my chart. The bottom, there's really three quadrants. I've got price, which is right up here where my cursor is at. Then right underneath that is the actual summation index for the New York Stock Exchange. Now, the key here is yesterday, it just ticked up. It just ticked up. It went from negative, not negative, but it moved up. And the trend, this is another trending tool out here. It's a great trending tool. I know that the trending tool that I share with you in my newsletter service is not one that's taught anywhere else or on that special report, and it is so helpful to really understand quick changes in trend. The summation index here ticked up before it got to below a zero level. In fact, the summation index on Thursday, today's Friday, on Wednesday, got down to a low of 433 out here. Yesterday, it closed out at 499, so it had ticked up. But what we're also really looking at is the actual oscillator down here, which has gotten to extremes during this move down. The last time that we saw that level was all the way back here at the lows in November of 2012 out here. So we're taking a look at this at the bottom quadrant of the screen. Now, when you have that oscillator get above zero, and that's really what it did yesterday, and the summation index tick up yesterday, that is what I was really referring to, and I was able to give you the number of 15,019, or whatever the number was that I gave you yesterday. So many numbers in my head, but I know the number today. You get it closed back below 15,000 inside the Dow, and it was 3 downs and out. But we have to pay attention to this, because significant bottoms form as a result of these patterns that we have out here. We just haven't had the volume in the marketplace. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 62 points. Trade out at 14,961. S&P down 4.5 at 1608. Composite off 11 points, trading at 33.90. Russell 2000 down 3.5 at 976. Google off $1.70. Apple trading out at 390 off 352. Microsoft down 10. Intel off 18 pennies. Let's see, leading the charge here to the upside, we've got BIB, Biogen is BIIB. That's up $13. Oh, what a nice move out there. Up 6% this morning. See if there's any news behind this move out here. Nothing that pops up on my screen. IDC, so Adaptive Biotech and Biogen, IDEX signed some type of, come on. Let me open this up here and see. There we go. So they signed an agreement with Biogen for the study of immune repertoire and the search for immunological biomarkers and difficult-to-treat autoimmune diseases. In any event, that's got the stock here moving higher this morning. PetroChina, PTR, that is up $5.47. That's up 5%. You've got Arkansas Best, ABFS, up 10% here this morning. See if there's any numbers out on these guys. No, they just ratified a labor agreement out here. GameStop up $1.49, up 3.5%. That thing's been on a little tear, I believe. Bed Bath & Beyond, BBBY, up 1.5% this morning. China Mobile, CHL up $1. Dana Holdings, DAN, is up $1 this morning. To the downside, lead the charge. You got Accenture PLC, ACN, off 12%. So that's getting hit. Looks like probably with volume as well. IBM is down 570. That's interesting. We're going to go certainly take a look at that. That is what is putting the weakness here, or, primarily putting the weakness into the Dow. So we'll take a look at that. Apple off $3.86. Research in Motion, RIM off 25% this morning. How can we not look at that stock chart here? Amedisys down $3 right now, down 22%. There's another one getting hammered. So we've got a few of these getting hammered to the downside. Again, our call number is 877-927-6648. So let's go start taking, let's first, I'm on the currency tab inside my chart. So let's take a look at what's going on inside the currency market here. Right now, you've got this is the 30-minute chart here for the Euro Japanese yen. This has really formed three excellent Gartley and or butterfly patterns. The first one was a butterfly pattern. That's the one on the very left-hand side, a 1.272 expansion. That turned into, and that was a butterfly buy pattern. That turned into a Gartley sell pattern. Look at the nice Fibonacci numbers that we've got out here, 1.272 on the expansion. Take a look at the 0.786 retracement and 1.618 expansion on that Gartley sell pattern out there. That was put in the top. And then what actually took place, we were taking a look. I was so focused, quite frankly, on the descending price channel that I forgot to take a look at the actual Gartley buy that had set up as it moved down to form that low here back on June 26th. My bad. I will not let that happen again. It may happen again, but I certainly will do everything I can to not let that happen again, because there was another nice buy pattern. And that buy pattern there, this was June the 26th. So you want to talk about being able to put some oomph into the markets like we have seen here over the past a couple of sessions out here. That was one of those markers right there that the markets would go ahead and move higher. This currency pair, the Euro-Japanese yen, does a better job of any currency pair, the best job, I should say, at following the U.S. stock market indexes. So you want to take a look at it. Now what we have seen is we've seen a 100% move of a move as it's come all the way back into the recent swing points that started that last Gartley buy pattern out here. So it's normal to see a bit of a sell-off. But, as far as I am concerned, it looks to me like now what we need to do is just go over to the daily chart. So if I go over to the daily chart for this currency pair, what this does look like it actually wants to set up. We'll go ahead and pull this out here. Looks like this may be actually forming the next larger Gartley sell pattern. This would be on the daily chart. And this is what the bulls absolutely want to see. The bears do not want to see this take place. If this pattern here completes, what will happen is you will see these markets move higher out there. Now, having had such a down thrust in the markets, and we'll go take a look at the ETFs and the indexes, because some of them are right between floors out here. This is not what the bulls want to. This is what the bulls want to see. It's not what the bears want to see. But it is the pattern that, quite frankly, is really set up. We're seeing here that 100% move of a mover, close enough to it as we take a look at today's candle versus the B point out here. Now, just because I've drawn this pattern in doesn't mean that this is what has to set up. Because as you go back to that 30-minute chart out here, we know that we are at a 100% move of move. So the move could possibly be over out here. You just have to be paying attention to the retracements on this move back. It's pretty much been a straight line move. I do believe that this Gartley buy pattern here, that what it's really doing is really setting up the 1-to-1, A to B equals C to up. That coming off of the A point out here is going to be the one around 2:30 in the afternoon on June 14th. Your B point is going to be around 5:30 in the morning on June 20th. Your C point was the one now of the A to B equals C to up coming in on June 26th. And 1-to-1 takes you up to the 131.27-ish range out there. And that's really what would be setting up the larger pattern on the daily chart out here. That would take you up into about 131, looks like about 131.95. Nice Fibonacci numbers coming together there. It could be the 1.272 that it stops at. It could be a 0.618. And so it's really a range that we would be looking at if you want to know what the 1.272 expansion is. I presume that it's really going to be the larger one that would actually set up, because that would complete on the daily chart an A to B equals CD up. But 130.78 would actually be the 1.272 expansion out here. So this is what it is that I suggest that you also pay attention to from a correlation standpoint, just simply to understand what's going on in the marketplace out here. Now, let's go take a look at some of these stocks here that are popping and dropping, because we had a few that were dropping like rocks, and we had one that was popping like it was a rock star, and that was Biogen Bib. So let's go take a look at it. I think I have that on my screen. I think I can. I don't have it up here. So let's go ahead and we'll put that in here, BIIB. So let's put that up on the screen, gapping up here this morning. And let's go see what this is actually doing out here. So Biogen came down into the breakout area, tried to get to the breakout area. And let's take a look at this. So as it pulled back, we can take a look on the left-hand side of the chart. You always want to find those high-volume bars out there in the marketplace. And if we take a look at it, usually you would put it on the bottom. I'll go ahead and put it on the bottom for the moment. But price never made it down there. And as we take a look at this and we go up to the top, it also never made it to the highs out here. Now, the volume is something else you want to be benchmarking. The volume there on that breakout session, that was March the 28th, it did 4 million shares. And as this came back here, and it came back on the 21st of June. It came back with 3.5 million shares. So still a little bit light as it was coming down into the breakout area. It also did a to B equals CD down. So it looks like it completed that pattern. That looks like this off the chart. You would take the high. It looks like the high on May 28th was 242.64. Yeah, so that's your A point, which is May 28th out there. Your B point on this is going to be the low that was formed on June 5th, and your C point right up here on June 7th. Now, what's really key, let me just change this here so it shows just the 1-to-1 A to B equals CD. There we go. Now, what's important to take a look at on Biogen Bib is if we take a look at, I'll do this here. I'll draw a line across the screen, and we'll go ahead. We'll make that one black as well, and I'll do that on the bottom. So let's see, as the B point on Biogen was being hit, was it hit with more volume? And it absolutely was. It was done that here on June the 12th. We can see the volume there, 2.7 million shares, taking out 2.3. That gave the indication that it was going to do a 1-to-1, at least a 1-to-1 A to B equals CD down. But take a look at how price here just simply traveled over on the right-hand side of the chart. And I'm really referring to the formation. You know, the straight line move on the A to B leg, that was clearly there. But the C to D really took some work in order to get Biogen Bib down to that 1-to-1 level, which was a price point of 195.39. So it completed that pattern, and that was really a good indication that it was not going to do a 1-to-1.272 area. So gapping up this morning and on good volume, 538,000 shares right now. The swing point it's going into only has 1.7 million shares. And that is the trading session from June 7th out here. If it can get above that, now let's just take a look at retracements because, I didn't mean to draw that line. There we go. Let's take a look at the retracements that this thing did here this morning. And it opened up right at the 0.618. So here's kind of another interesting tool out here. I know somebody had called, maybe it was last week, and was talking about when you gap up, you can really lose a lot of energy. And in this case here, Biogen, in fact, opened up or very close to opened, was very close to opening up at the 0.618 level. And so it had to expend a lot of energy to get up to that 224.31 mark, but it's still doing it with volume out here. So, you know, you're pushing into a swing point with volume, and as long as this doesn't sell off today, it's got enough to take that, and it has not visited yet the high of that swing point from June 7th, and that high is 228.10. So it looks like really that's at least where it wants to go to, and maybe if it can get above 228.10, that'll set up in Biogen's case a run for the 242.64-ish mark. Now let's go take a look at Accenture. The ticker symbol on that is ACN. That is trading off about 12% here this morning, and I imagine there's going to be volume behind it based on what I see going on another screen out here. Yeah, this thing has got big volume behind this move. So let's go see where this is trying to travel down into. Give me a moment to pull this back here. So as we take a look at, this is Accenture, ACN is the ticker symbol. Down here this morning, gapping down. It has already done 6 million shares. Now, this thing had a sign of strength that held, and this is where it's going to move down to. Let's draw this across the screen out here. That sign of strength really came in on the trading session of September 28, 2012. And so we'll use the breakout day of that. We can see that this thing broke out. This is nice when you want to, this is why when you see a breakout, you don't necessarily have to try to jump in on it. Instead, wait for that, just mark everything down on a pad of paper and wait to see if it comes back to that breakout area. In this case here, I take a look at Accenture on the trading session of September 28th. Breaks out with 9.8 million shares, gaps up, and then it takes all the way until the time frame here, if you were patient from a fishing standpoint, of November 15th, November 16th. November 16th pulls back into the breakout area with 3.8 million shares. Now, the actual candle that it broke out from, which was September 27th, that had 4.7 million shares. That is a textbook way to be able to buy a breakout session, because your real benchmark in buying a breakout or in selling a breakdown is the actual volume of the day when it gaps away. But what you like to do is you like to really see it coming back to the area where it broke out from, and you like to be able to see it coming back in there on lighter volume. That gives you double whammo information out there, and in fact this thing went ahead and took off. It had a little bit of a scary session right here on the trading day of December 20th out there as it moved down with 10 million shares out there. But once it cleared back above that range, it was off. Now it's off to the races, back down to the bottom here. You can see that what's holding it in place right now happens to be that high volume session from December 20th. It's the top of that level that is holding this thing in place here. So it's testing one high volume bar. If it can close inside there, meaning 69.19, it should come back and it should revisit this area here. We'll see if this will hold as support. But this thing now has some volume off of its highs out here, and that is not a good thing out there. You can see this has a big high volume bar right back up here that may also hold the support. But this takes you back into 2011, so I'll kind of discount that here for the moment. That is on Accenture PLC. Now let's go take a look at IBM and see what IBM is doing, because that is the second. That's off $6.77 out here. Let's go see if there's some volume behind the move of IBM. Where is that on my chart here? It's got to be right in front of me. And it's not. So we're going to have to go ahead and put it on there. No problem. So we're going to take a look at IBM, trading out right now at 188.75. So it is moving down. Let's see. This looks like it's taking out a swing point out here. Let's go see what it is traveling into. So as we pull this back, IBM is trying to take on the swing point here. Had a nice big downdraft day on the trading session of April the 19th. Made a little bit lower low. The following trading session with volume of 9.8 million shares. And that was on April 22nd, I should say. The low there, 187.58. Let's draw a red line across here. You're trading inside that swing point. That is going to be tested here this morning. Right now, you are down. You've gapped down today with volume of 1.8 million shares, taking out a swing point here that has 4.3 million shares from June 24th, Monday's candle out there. So with IBM being a leader in the Dow on the way down, that is not a good thing. That is not well, it's a good scene if you are a bear right now. This is not a good scene from the bullish side, because this thing is already back to the, or taking out the lows here from June 24th, where we saw the market reverse. So that is kind of interesting. It's a great piece of information, especially with IBM being the largest weighting structure within the Dow here. Very interesting, as Schultze liked to say. 877-927-6648. We've got the Dow trading off 92 points right now, S&P off 7, and we'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow off 99 points right now. S&P off 8, and gold certainly getting whacked off 20 bucks now, trading out at 11.91. There was a swing point that it has just sliced through. Did that yesterday. That was the December 3rd, 2009 swing point high. That had a low of that swing point was 12.0520. The high was 12.2750. Right now, gold trading out at 11.91. So it has sliced through that on the daily chart out here. Let's go put the longer-term chart. Gold, the 0.618 area is 11. 50-ish or so very close to being able to hit that. I mentioned to you, I'm going to go back here. We're going to take a look at the weekly chart. In fact, let's look at the monthly chart. That's even better. So let's go do that. Why didn't I think about that earlier out here? Let's take, there we go. We've got the monthly chart. Okay, so here's the monthly chart on gold. And the monthly chart on gold shows, now this is coming off of the lows back here in the 2008 time frame. You had gold down at about $724 a ounce out here. And if you go from that low all the way to the highs that were put in back in September of 2011, your sweet 618 area is $11. Yeah, maybe it said $11, right? $1,156 out here. But take a look at this. I'm going to blow this up here and move this over to the side and shorten it a bit. But take a look at my system here, struggling a bit. Take a look at that wide-ranging bar as we finish the month of June. Boy, June went by just like that, didn't it? You've got a wide-ranging bar coming in there. That, folks, is not a good scene at all. And the reality is that it really does set up here. Now, markets do not end on wide-ranging bars. They just simply don't. And so there is no need to rush in and try to buy gold out here or buy the GLD. It needs to. It's going to need to really prove itself, in my opinion. What this really says is that over the long haul, maybe there's a trade out here, but when you come into a pattern like this, a Gartley buy pattern, long-term Gartley buy pattern, 1155, and you come in there with a wide-ranging bar, it really says it wants to go to the next level. That next level, $946. So over some period of time, just like it took a while on the daily chart to break through, if we go back and take a look at it, to break through the swing point that we were looking at on the first down thrust as it broke the consolidation level, which was the price point here of April 16th, 1321. So it took from April 16th until the trading session of June 20th. So it took 2 months out there before it broke away. That wide-ranging bar says that, you know what, it's very likely that we'll see gold go down to that point 786 retracement area before we see a reversal in the marketplace. So it looks like that is where Goldilocks is headed to. Let's go take a look here at natural gas. Let's look at natural gas. Let's look at a failing pattern out here. At least it failed yesterday. As we take a look at this, this had formed there was a number of patterns that were forming out here in natural gas. Number one, we had this nice rising price channel that had contained price. That area broke. We had the second nice pattern out here. This was a Gartley buy. Nice 1.618 expansion and a 0.618 retracement level coming into that area. So that was a nice move out there. And we saw a little bit the bulls or somebody tried to trade that pattern out here, and that was on the trading session of June 26th. The key is always waiting until you truly get a bullish reversal signal. And although this was a piercing candle out here, it's so important to pay attention to the candle that you're trading inside of. In this case here, that was your June 25th level. And until natural gas closed above $3.76, it really said just be cautious out here, because if this was a longer-term pattern and price were going to go rise back up to the top of that price channel, said you can be patient. I was looking at this as a trade, and yesterday, as soon as it broke through that level, as soon as it broke through, it said no trade here. Folks, stay tuned. The Nadex Bull Bear Binary Option Hour is up next. If you're off to start your Friday, have a great holiday. Well, it's not the holiday just yet, but you might be starting it early. Have a great summertime Friday, and look forward to seeing you Monday morning. Take care, folks. Have a great weekend.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.